for joining us. Fresh news flow coming in from the West Asian region. You have seen the global impact. The global handle was not looking all that well for us. Where do you expect our markets to head today?
Morning, pleasure to be with you. Yes, there is negative news flow from West Asia, and we have to see this in sequence. Since 2022, there have been geopolitical issues which have played out across the globe. But other than temporary moves downward in the markets have been quite resilient. Even in times like this, the markets have been actually quite resilient in the context of how big the situation is in the West Asian region. Unless there is something cataclysmic, like a nuclear sort of holocaust or something like that, it looks like the markets are taking all of these geopolitical issues in their own stride. The trend is, and the prevailing emotion is positive in the markets. And as a result, it is our judgment that markets over the long term will follow earnings trajectory, which clearly from recent numbers, as also from commentary from management, looks like it's going to be positive. And in that context, we don't think that there is, or rather, I should say that we are in a favorable risk-reward situation. If this geopolitical event abates and it eases off, it looks like that the markets are primed for an upmove.
All right, that's the take coming in on the markets. Hi, Anshul. Morning. This is Shrishti also joining in. But which sector do you believe will participate afresh in this market rally upwards, as you have been expecting that to happen? Because a lot of sector churning is already underway. In some of the fresh rounds, we are seeing IT making a comeback, life insurance counters doing well, OMCs are holding up. Give us some sense that where do you see the next leg run up for the sector-wise churning?
Morning, Srishti. Thanks for having me. Yes, what we are seeing is that, of course, sector after sector is seeing tailwinds. We think that the financial space is actually quite interestingly poised. We, in the last year, saw an earnings downgrade from the previous year in this sector, and also stocks across the board consolidated. But in recent times, price action in that sector has been quite positive, particularly in the private sector space, private sector banking space. Also, the price action in the PSU banking space seems to be quite interesting. There are upticks that we have seen over the last 2-3 months. Also, earnings look quite interesting in that space as well. Earnings seem to have tailwinds. So banking and finance looks quite interesting. Another theme that we are kind of seeing is that post the GST implementation, we saw a move from the unorganized to organized on the manufacturing side, but very little of that happened on the distribution side. We see the second leg of that unorganized to organized move happening on the distribution side across sectors. Whether it is metals, it is pharma, it is capital goods. We are seeing that on the distribution side, there is a move from the unorganized sector to the organized sector. And as a result, there are huge tailwinds in that space, as we are seeing in numbers going ahead. That space has a few listed companies, and those listed companies, the price action seems to suggest that this move has legs. So we see in the distribution bracket quite a nice tailwind in demand. Capital goods, defense, of course, stock specific, but in those sectors, in discretionary spending, in that space, we are seeing opportunity. There is opportunity across the board. And I would urge your viewers to not really trade, not look at the next quarter, 2 quarters, but invest for the next 5-10 years. India is the best story in the making.
This call coming in from Anshul this morning. Invest, don't trade for the short term is the call coming in. Kunal, I was looking
looking at a report that came in by Nuvama this morning, wherein they're talking about some stocks that they expect to see some outperformance in going ahead, since they have been laggards so far. And two stocks that particularly caught my eye are Dabur and Nykaa. Do you believe the charts reflect that the stocks have what it needs to become an outperformer in, let's say, the short to medium term?
See, Dabur, I'm not sure because, frankly, the stock has still been a huge underperformer, and there's nothing on the charts, frankly, at least as of now, that, we can look at this as a potential turnaround candidate. No major volume built up. The volumes, the indicator setup is also not very attractive for, Dabur. And I think the more important part is relative strength. So because that's the perfect metrics to understand, how stocks, they generally move in comparison with the other peers. And there was a phase where, the likes of Britannia, etc., Tata Consumers, these stocks had done reasonably well, and Dabur had, underperformed. It still continues to underperform, even in the phase when the stocks, most of the FMCG stocks have gone through a rally, as well as in the phase of correction. So, but Nykaa on the other hand, I think the chart setup is a little bit more better because the stock is just about trying to take its own time to break past about the 200, 210 major resistance band. The indicators on the monthly charts have started to recover quite positively for Nykaa. The stock made a low of, I think, 120, 125 in 2022 thereabouts. And from there, the stock has started to show signs of good recovery. It's been a very gradual move on the upside for Nykaa. But I think, the stock still holds potential. The only confirmation which I think I would probably wait out for Nykaa would be a breakout of that 210 mark. That could be a very strong indicator that the stock has come out of a major time-wise as well as a price-wise consolidation, and the momentum is here to kickstart again for the stock.
All right, so that's about some of the counters over there within the consumption basket. But all eyes will be on Hindustan Zinc as well. We will connect with the management in a short while from now. But let's have a technical check on this one, as the company has announced their expansion plans, steps towards a 2x capacity growth. And along with that, some reports are also suggesting that Vedanta will be looking to offload their stake in this counter as well via block deals. Sharan, if you can give us a chart check on Hindustan Zinc, how do you see the setup? Because off late, with the surge in the silver prices as well, the stock has been on the roll.
So, Shrishti, as you mentioned, there's going to be a block deal, and I think the discount was around 7 to 10%. So definitely after opening only you can review, but after a short around 6-month consolidation, the stock gave a breakout around 470 odd levels. So if the stock consolidates around that kind of level, and with silver pricing being at all-time high, one can definitely look at accumulating the stock going ahead. But since the block deal is going to come, it will be very difficult to give a call currently on this stock. It can be around 7%, 10%. So I don't know where the stock will open in morning. And after opening, we can take a call on the stock.
Okay, that's the take coming in on Hindustan Zinc. But let's address one issue which has been pretty much on top of everyone's mind. And it seems that the Coal and Mines Minister held an interministerial meet with the Steel Minister to discuss securing the supply chains of rare earth and critical minerals as well. In fact, my colleague Prakash Priyadarshy joins in with more on what really happened at that meeting.
It's a very crucial development coming in as the Mines Minister has chaired an important interministerial meeting on the issue of rare earth and critical minerals. In fact, the meeting was attended by the Steel Minister along with the officials from various ministries such as Atomic Energy, Heavy Industry, Steel and Commerce. Several aspects have been discussed to deal with the current situation where industry is facing shortage of rare earth magnets. Industry such as electronics, auto are facing several challenges. Therefore, government is exploring various options. In fact, discussions were focused on strengthening the value chain from mining to refining to end use. Along with that, the government is also adopting a whole of government approach to deal with the current situation. 3 important points have been discussed. The first one is with regard to ensuring sufficient supply of rare earth magnets and critical minerals to the industry to meet domestic demand. And therefore, government is in touch with the Chinese government. Along with that, the government is also exploring an option. In fact, it is considering a proposal to allow industry to import ready-to-use equipments where rare earth magnets have been used to complete ongoing projects on time. Last but not the least, we're given to understand that the government-to-its company, Kabil, which is a joint venture company between various PSUs, is acquiring several critical mineral blocks all across the world. Some of them have already been acquired, and the Kabil is in process to acquire some more projects going forward. Idea is to ensure sufficient supply of critical minerals here to the industry, and the government is making all these efforts to become Atmanirbhar when it comes to critical minerals as well.
Right, okay, Prakash, we'll leave it at that. Anshul, hi, morning. What is your own sense on whether the pain is already done and digested with when it comes to autos and the kind of impact that they're likely to see because of rare earth minerals? I mean, just day before, talking about the global turmoil, not just the rare earth issue, but Tata Motors cut their JLR guidance, for instance, for FY26. We've heard Maruti as well go on record. Do you think the damage is in the price? And can these stocks be bought now?
Morning, Aisha. Pleasure to be with you. Yes, that is the crux of the, of the situation as to whether most of the negativity is in the price. Now, if you look at news flow and alongside that, if you see price action, some of the names that you mentioned, take Tata Motors itself. The news flow was back-ended, the price action was front-ended. So price action was adverse, and then the news flow became adverse as things played out on the price. That clearly tells you, and as we all know, that the markets are forward-looking, and they're actually looking at what's going to happen with the earnings, reacting first, and then the earnings follow. Now, with price action having been adverse in most players' case, and also, news flow suggesting that things are bad, we believe that from here, it's really going to be earnings which will determine price action. And earnings in most cases seem to have bottomed out. Also, if you look at volume trajectory for particularly PVs, it looks like volume trajectory in the current year is quite stable to up. In case of commercial vehicles, definitely there is an acceleration. And given the action on interest rates by RBI, it does look like there is tailwinds to discretionary spends that we can anticipate in the current year. Given all of this, it looks like autos may be in a bottoming out phase. Most of the negativity seems to be in the price. And any positive action on both the macro as also the micro of individual companies should lead to positive price action in the stock prices. So that is our understanding of how this situation is poised.
The other thing, Anshul, I wanted to talk about was BSE. And, given that there is a change now in the expiry, help us analyze what's going to happen when it comes to market share and volumes on BSE. And do you see an EPS hit as well come by and therefore, a derating in the stock as well, or at least a knee-jerk reaction for some more days?
If you remember, Aisha, a similar sort of situation happened on the frontline index, which is NSE, sometime back, and there was a sort of a negative impact that exchange witnessed on earnings, at least on expected earnings, and it is quite likely that we will see also this BSE in particular has seen an uptick on F&O activity and also market share. With this particular change, there is likely an expectation that there will be a market share hit going forward, which in turn could have an impact on earnings as well. Now, given how the stock has behaved in the last, say, 2-3 years, and particularly in the last 6 months, with so much expectation built into the stock, there is very little room for error. And this development clearly has the makings of really a shaking of the stock, and so we will have to wait and see. But clearly, this is not in the best. It's not the best thing to have happened when the price has behaved the way it has.
Kunal, you sense a deep crack coming in on BSE today?
Yeah, I think the correction should start off yet again. In fact, the stock has already corrected 10%, if I'm not wrong, the last 7 8 days from peak. 3,000 was the high. A couple of days back, I initiated a sell also on BSE, pure on the basis of technicals. Where we anticipated that the stock is going through a turnaround or a reversal, of sorts. But I think this could probably, so this could have a dual impact on the stock price for BSE. One, of course, is a knee-jerk price impact into the stock price, and the second is that it could delay any kind of a major buying. So, the stock was going through a fantastic buying over the last 2-3 years, where you'd seen every kind of a major or a minor dip into the stock price taken as a very good buying opportunity. So that stance will now change for the stock price, and you might not see the kind of uptrend the stock has been seeing over the last couple of years. So this could not just be a knee-jerk impact on the downside for the stock price, but this could also be a more of a drift which the stock would face over the next many months.
Anshul, what do you think is going to act as the trigger for the markets now? And you think soon it'll be earnings season, and that really is the key thing?
Aisha, when you ask traders about what metrics they follow to understand short-term moves, they will tell you that there is something called the MVP indicator, which is momentum, volume, price. If there is an uptick on all three parameters, clearly they anticipate then that the markets will see a up move going forward. Also, in the current phase of our markets, we have seen about a 10% move in Nifty, and thereafter there has been some amount of consolidation that we have seen. And that has been on the back of geopolitical tensions mostly, as also to some extent the fourth quarter derating in numbers that we have seen, albeit that derating has been quite tempered around 2 to 3%. Given this sort of a situation, and for the markets to consolidate and really not give in, not fall, it's actually telling you something about the emotion of the market, which seems to be on the uptrend. And given that earnings trajectory may have bottomed out, given that last year was a weak year, and also that geopolitical tensions may be at peak and may have only downside from here, not so much upside. It looks like both on earnings as also on geopolitical issues, we may have positive triggers going forward. And any of those two things, or both combined, if those play out positively for the markets, these markets will probably move up. The emotion clearly in the markets is that to move up from here, not so much down.
Okay, Anshul, so great to have you today on the show and join in with your insights. Good speaking with you as always.
Thank you, Aisha. My pleasure.
Okay, let's move on while we count down to the market pre-open rates. Let me also welcome on board. We've got Arun Mishra, CEO and whole-time director at Hindustan Zinc. Lots to